Hello again and welcome. This is Robert Schein, Managing Director and Partner of Blanke Schein Wealth Management. Today is Thursday, the 25th of February, 2021. A lot of headlines. We're going to recap sort of the action of the week. So let's get right to it, and thanks for watching. So yesterday we had a day of days where we had a huge reversal in the equity markets, and that was tied to the Federal Reserve. Jerome Powell, the Federal Reserve Chairman, spoke, and again, just really to sum it all up, this week he was extremely dovish, he was extremely accommodative, really supportive, and basically said the Federal Reserve is going to do all that they can do to ensure that the economy gets back on track and is fully supported with full employment. And doesn't matter that there's inflation that you and I see and experience on a daily basis, they're going to let inflation run hot. So this is going to be another topic for another day. But in the meantime, they're going to keep interest rates as best as possible, super low for super long, essentially is the take-home point. Now, the 10-year Treasury was doing something different at the same time. I spoke about it last week. I spoke about it on Tuesday of this week, and I'm going to speak about it again today because the action of the 10-year Treasury is really the whole story behind the equity market sell-off, if essentially. I said, we watch the fixed income market, the bond market, the 10-year Treasury here at Blanke Schein Wealth Management, because that's what moves the equity markets, okay? The equity markets, the stock market, i.e., is the sideshow. It's super small relative to the fixed income market or the debt market. And the debt market and the liquidity of the debt market is ultimately the most important thing as it relates to managing money efficiently and effectively and navigating through markets, all the market volatility, ups and downs. Now, here's what's interesting. Yesterday, as I discussed even on Tuesday, we're going to see the resistance on the 136, 137 of the 10-year Treasury, and we got 137 intraday or closing 137, 138 earlier this week, okay? And that's the exact level that we talked about. Now, yesterday, February 24th, intraday, we had 143.5, like 143, almost 144 on the 10-year Treasury intraday. Now it's back down to the 137 level and right around here. Okay, so and that's when the markets reversed on Tuesday or Wednesday, excuse me. As soon as the 10-year Treasury broke above the 137 level, about 143, and then reversed down back to this resistance level, that's when the equity markets took off. Okay, because they knew they had the support from the Fed, but they also knew that the exact what's happening in the Treasury market, that show is ultimately something that is going to come rear its ugly head later on, maybe this year, maybe next year, when the Federal Reserve decides they have to be in a position to raise interest rates, but interest rates have already risen, right? The barn doors have already been closed, but it's too late because everyone's left, right? So that's going to be the tug of war. We saw that in 2015 and 14, 15, 16, when the Federal Reserve had to raise interest rates. It's called the tantrum. So the equity market, the stock market is going to get really upset. It's going to sell off, and the Federal Reserve is going to be caught because growth is super hot and everything's going up in terms of valuations. And so the Federal Reserve at that time is going to have to get ahead and slow down the economy because everything that they did is increasing the economy's speed. Now, keep in mind, we have contrarian ideas that are playing out, right? The energy levels, the banks, the industrials, and the materials, all of that is doing exceedingly well. We put the contrarian trade in place for our clients fourth quarter of last year, and we added to it early on in January and even February of this year. And it's playing out. Those are the best performing within as tech takes a breather as we see a market rotation. And rates, you know, we just keep an eye on rates and the 10-year Treasury, because that is, for all of us in the investment management world, that's the exciting part of this whole game that we're seeing play out right now. So that's our update for today. Thanks for watching. We'll see you again next time.